Hello and welcome to Aisot Technologies video series about the latest developments in AI for investment management. My name is Stefan Klauser, co-founder and CEO at Aisot Technologies. Aisot Technologies is all about applying latest technologies to allow customized performance at scale. We're a company headquartered in Zurich, Switzerland, and with an office in New York, US. We've been founded in 2019 and are a spin-off from ETH Zurich. So today's topic is about AI-powered mitigation of downturns on the crypto side. You've seen it all. The last few days and weeks were quite bumpy in the crypto market. With a lot of downturns, some specifically difficult days towards end of last week or the beginning of this week. And we obviously wanted to know how would have our Aisot portfolios reacted to these actual circumstances and where would we be standing. We picked a very obvious example that we are often asked about, a portfolio where you only invest into Bitcoin, Ether, and cash. So you would have these three components in the universe. You would do weekly rebalancing, and everything can go up to 100%. So you can go either 100% Bitcoin, 100% Ether, 100% cash only, or you can mix those three into a portfolio. Turnover rate can be 100% as well every week, and we already calculated a 5 basis point fee here on every trade. But let's jump to the platform for this to show it directly live. Start here in August 2021, so that's a 3 years period until now. We see an extremely nice pattern here on the AI portfolio, namely that it would have never gone into negative area. So even in November 2022, the portfolio would have been slightly plus at plus 4.87%. As of now, as of yesterday, the portfolio would have actually reached around 188% plus, while on the Bitcoin side, we would have been at around 40%, Ether around minus 3.63%. That's quite a big difference for not having any other coin or token in that actual portfolio. So where does that come from? We can have a quick look at the portfolio composition, and we would see that the portfolio was quite radically shifting between the different assets. So you would very often have either 100% Ether or 100% Bitcoin or 100% dollar. And there is very few actual moments where you would have a mix. And even then, maximum would have been 70% Ether, 26 Bitcoin, and a little bit of allocation in dollars. So here you would see that the engine is very actively using that space that we give it to rebalance between these assets. This led to the nice or great outcome, I would even say, that we have in maximum a drawdown of around 50%, whereas in Ether and Bitcoin it's always between 75 and 80%. Volatility is lower than in the Bitcoin tracker, and with an annualized return of 42%, it's more or almost 4 times as high as the annual return of Bitcoin here. So again, let's look at the last period here, and you would see that our portfolio actually would have gone to 100% cash already on the 1st of July 2024. So that meant the engine was predicting the returns, the volatility, and the risk of the actual portfolio, and decided on the rebalancing, which is monthly here, always on the 1st of every month, on the 1st of July to go 100% into US dollars, and was continuing that also on the 1st of August. So we wouldn't have had any exposure to the market during this period, and obviously this led to the fact that we would not lose this whole performance that we had over the last weeks. You see here, for example, Bitcoin was still at over 70% plus on the 28th, and now is down to 40%. So it lost almost 50% of the performance within a week or two, as compared to our portfolio would just keep the performance that was made until here. In general, you would see that it often tended to avoid bigger drawdowns, like in early 2022, or also then in spring 2022, and again a quick period here in autumn. And then on the upside, though, especially since October 2023, would have almost taken the full upside again, and then try to minimize the risk again on the periods where we see more downside volatility. So this is exactly what the engine should be doing here on our platform, to have a view on the risk. If you give it enough space to move between different assets and to apply cash, you could have extremely nice outcomes. We can also quickly see what that would mean just for July 1st until today. And you would see also that most probably also with this period, we would clearly beat the benchmark, as this includes the last weeks as well. So you'd see here, obviously the portfolio would stay at the same level. It's 100% in cash. There has been a period around the end of July when especially Bitcoin, but even Ether would have been a bit better than zero. But you would then see over the last few or 2 weeks roughly, or 1 or 2 weeks, the market came down quite dramatically, and Ether would be currently over this a bit more than 1 month, minus 29%. Bitcoin is more than 10% in minus as well. So this is just to make you aware of the possibilities of the platform, what we can do here. You can also have the historical composition as downloaded as a CSV if you go back to the longer time period. Going back to the platform, to the initial view, we can one more time verify that we have everything invested in US dollars as of the latest rebalancing. That's it for now, for today. We wanted to show you what's possible with the Aisot AI platform and how the engine can help to avoid larger drawdowns. We'd be very happy to speak to you if you have any questions, or if you want to try out the engine for your own portfolio or your future investment product. Thank you very much, and have a good day.